For more on all of this, let's bring in Isabel Hilton, founder of China Dialogue. Thank you very much indeed, Isabel. Great to see you. And just first of all, President Xi resetting the tone on economic development. I mean, what kind of message do you think Beijing is trying to send out at the moment?
Well, it is that time of year when we all start looking at China's plans. We've had the plenum. There's a Central Economic Work Conference coming up very soon, and this all, of course, feeds into the two meetings in March when the numbers get put on it. So we don't have the numbers yet, but this is clearly all about the domestic economy and the need to rebalance. It does have important repercussions internationally, and it's quite clear from what's been said that China's not turning its back on global markets. But we have had a very turbulent year in global trade, largely because of the US and its tariff policies. And although we have a 12-month truce, nobody can really count on stability, given the war in Ukraine, given mounting climate impacts, which will hit treasuries, and the continuing volatility of the US administration. So these adjustments do seem to be aimed at reinforcing China's relatively long-running de-risking policy, which means continuing the recovery from the property crash and finding a way, as you said, to stimulate domestic consumption. So when we hear phrases like a more proactive fiscal policy and appropriately loose monetary policy, it's a correction, I think, from the attempt to get more of a grip on debt, which had a depressing effect on consumption. And it's a rebalancing. So we're probably going to see more debt, maybe additional rate cuts to reach the growth target if it's 5%, as it's likely to be next year. So it's not a huge reversal, but it is definitely a readjustment.
And what would you say the picture does look like for next year?
Well, the exports, as you said, look very strong. We've got a trade surplus of $1 trillion in November from year on year, which is the first time. The exports to the US were down nearly 30%, and the exports to the European Union were up nearly 15%, as well as the ASEAN growth. Now, we can understand why the exports to the US are down. The problem is that shifting those exports to Europe has caused strain in the European markets. And we had a very strong message from Macron during his visit last week, President Macron saying, please, China, think about the impacts of your industrial policy on your biggest and best consumers, which remain in Europe. And I think we'll probably get a similar message from the German foreign minister this week. So at the same time, this policy of promoting the industrial economy to carry the whole economy is causing problems in China too. So we've got what the Chinese government calls neizhuang, which is a kind of involution, deflationary pressure on prices. So Chinese firms, they're selling a lot, but they're really not making money because they're having to compete in this very kind of savage way. So the problem that China's been grappling with for nearly 10 years is how to grow the domestic market. And I think that may require more fundamental reform than we're seeing. So, that could mean leveraging China's global footprint to expand production abroad, for example, but also shifting real money into consumers' pockets.
Isabel, as ever, so grateful for your input. Many thanks indeed. Isabel Hilton, founder of China Dialogue.